Let's now understand another very important aspect in the standard, which is lease modification. And let me tell you friends, once you understand lease modification and the remeasurement of liability that you have discussed earlier, a major part of the problem related to Ind AS 116 would be over. Then we have one more complex topic, which is sale and leaseback transaction, that will come to it slightly later. But if you understood this, then a major problem, a major headache for you for your examination as well as for real life application would be solved. Now, what is the meaning of lease modification? Lease modification is nothing but changing the terms and conditions of the lease. Originally you agreed something, now you are changing certain terms and conditions of the lease. Say for example, we took this particular premise on lease for a period of 3 years, right? So that 3 years was a non-cancelable period and there were no option to extend or terminate, nothing was mentioned. So we took it for a period of 3 years. By the end of second year, we realized that we need this premise for another 2 years, means original 3-year period and additional 2 years we would need this premise so that we can carry out our operations efficiently. So we went to the landlord and we discussed that, see, we have taken your premise for 3 years period, but now we feel that we would need till the end of 5 years. Let us negotiate, let us agree on revised terms and conditions and let us extend this lease term, right? Now here what are we doing? We are extending the lease term. Was this extension agreed upon earlier? It was not agreed upon earlier. There were no option to extend, there was no option to terminate. It was not at all agreed earlier. We are modifying the lease. We are modifying the terms and conditions of the lease by extending the lease term, right? So this is one example of lease modification. Similarly, there could be a case where we feel that this space is not sufficient. By the end of first year itself, we realize that this space will not be sufficient for us to operate even for the 3-year period. So we may tell the landlord that we'll occupy this place for another 1 year, but after that 1 year we'll not be in a position to occupy. So let us modify the terms and conditions of the lease. Let us agree for a 2-year lease term. So reduction in lease term is also possible, right? So this is what is called modification of lease. Now when we proposed the landlord that we want to reduce the term from 3 years to 2 years, the landlord told us, don't worry, the second floor will be vacant after a year period and at that point of time you can occupy that period. You need additional space, right? I'll give you the additional space at the second floor. You already have the third floor with you. We said, yeah, that's a nice idea. We don't need to look for new places. We'll get the right to use the second floor as well. So here what is happening? We are adding a right to use asset. We are increasing the scope of the lease by adding another asset to the contract of lease. Okay, so this is also called as lease modification. Or think of a case where most of the employees are working from home and we do not need the entire third floor. Then we tell the landlord that you please take back half of the floor space. Now even that is a modification of lease, okay? Or maybe due to COVID and difficult circumstances, we may negotiate with the landlord to reduce the lease rental. That is also possible, okay? There are COVID related exemptions and all, we'll come to it later, but we could even renegotiate the consideration for the lease. Or there is an alternate property available next door which is available to us at a lesser rental. So we may go to the landlord and say that that person is giving to me at 90,000, you are charging 1 lakh, can you please reduce it to 90,000? So such renegotiations are also possible. So whenever there is a change in terms and conditions of the lease which was not originally agreed upon, that is called lease modification. Now this lease modification can be for scope of the lease and consideration for the lease. Now what do I mean by scope of the lease? Scope of the lease basically covers the asset under question, that is you can increase the right of use assets or you can reduce the scope of right of use assets, and the term of the lease. You can increase the lease term or you can decrease the lease term. So like when I say right of use assets, it could be I take an additional floor on the same building or I give back a part of the lease space which I have taken. This is what is called scope modification. Then the other part is change in the consideration, right? You could renegotiate, or the landlord may come up and say that, see, in the market the rentals have shot up like anything, so you also need to increase the rental. That is also possible, okay? So such kind of renegotiations are possible under lease contract, and whenever you change the terms and conditions which are not originally agreed upon, we call them modification of lease. Now this is different from lease payments which change based on the terms and conditions of the existing lease. For example, there is a variable payment which depends on an index or a rate. Now when the index changes, the payment would change. Is that a lease modification? That is not a lease modification. That is simply an application of the existing terms and conditions of the lease. So that is where we did remeasurement related activity. Even in case of lease modification, we will do the remeasurement only, but the difference between lease modification and the remeasurement of lease liability is that whenever we talk about lease modification, there is a change in the terms and condition of the lease which was not originally agreed upon. You could add right of use asset, you could reduce right of use asset, you could increase or decrease the lease term, you could change the consideration, all of those things which were not a part of the original lease contract. That is what we call as lease modification. So, if you look at the definition of lease modification, it says a lease modification is a change. So, when I say change in the scope of a lease, it could mean adding or terminating right to use one or more underlying assets or extending or shortening the contractual lease term. Okay. So, that is what is change in the scope of lease, or a change in the consideration for lease that was not part of the original terms and conditions of the lease. So, whatever was not a part of original terms and condition of the lease, then and if that part is being changed, that is what is called lease modification. Now, let us take one part of the example that I gave you and extend our discussion further. I told you that the landlord offered us the second floor for lease. Okay. Now, when the landlord is offering me a second floor for lease, is that not a separately identifiable asset? Yes, that is a separately identifiable asset. Can I determine the rental for that place separately? Yes, I can determine the rental for that separately. Then, should I not be accounting for that as a new lease contract? Why should I call it a modification of an existing lease contract? See, my contract is for third floor. For third floor, I pay 1 lakh per month. Second floor, the landlord says the market rental is 1 lakh per month. I will offer to you at maybe 95,000 per month because I need not search for a new tenant. I need not incur marketing costs, advertisement costs, all of those things. So, I will give it to you at 95,000. Now, the question is, am I getting the second floor at a rate which is similar to the rate in the market? The answer is yes. Is that independently identifiable? Yes, that is independently identifiable. Then, why should I treat it as a modification of my existing lease? So, what the standard says is, if there is an increase in scope by adding one or more right of use asset, that is, if the scope is increasing and the scope has increased not because of term, it has increased because you have added another right of use asset or right of use assets, in that case you have to check whether the increased consideration is commensurate with the standalone price of the increased right of use asset. So, what I mean by that? First question should be, is there an increase in scope by adding one or more right of use asset? So, in our case, we have taken the second floor. The answer to that is yes. Second, what is the increased consideration? Now, I told you the increased consideration is 95,000. Is that increased consideration commensurate with the standalone price of the second floor? Now, the market rental is 1 lakh and I got that 5% discount because the landlord would save money by not spending on marketing, by not paying some broker as a commission and all of those things. He has passed on that discount to us. Okay. So, the rate is commensurate with the standalone price of the increased scope. If both of these conditions are satisfied, or if answer to both of these is yes, then what the standard says is, it is not a modification of your existing lease liability or a modification of existing right of use asset. It is a separate lease component in itself. That is to say, if both of these conditions are satisfied, the lease modification would be treated as a separate lease contract or a separate lease component for the purpose of accounting. Okay. You may modify it in the same agreement, that is perfectly fine. While drafting the agreement, you may cancel the existing agreement, create a new agreement, it's perfectly fine. But as far as the accounting is concerned, if both of these conditions are satisfied, that is, there is an increase in the scope by adding one or more right of use asset and the increased consideration is commensurate with the standalone price of the increased scope, if answer to both of these questions is yes, then the lease modification will be treated as a separate lease component and will be accounted accordingly, which means you will not modify or remeasure the existing lease liability or right of use asset. Okay. So, a lease modification is accounted for as a separate lease if the modification increases the scope of the lease by adding the right to use one or more underlying asset. So, this increase is only for increase in right of using one or more underlying asset. This does not have to do something with the increase in term. Please keep that in mind. And the consideration for the lease increases by an amount commensurate with the standalone price for the increase in scope. If both of these conditions are satisfied, then the lease modification is treated as a separate lease. So, there is no complexity in accounting. You will consider it as a separate right of use asset for the second floor, a separate lease liability, a separate discount rate, and you will do the accounting accordingly. Okay. So, if this part is clear, we can move on to the next part where the lease modification is not a separate lease. In that case, you will have to modify or remeasure the right of use asset and the existing lease liability. So, if the modification is a separate lease, you will account for it separately. There is no confusion in that. If it is not a separate lease, why it would not be a separate lease? Say for example, in the same case, we negotiated with the landlord and we got the second floor at 70,000 only. What is the market rental? 1 lakh. Now, why did the landlord give it to us at 70,000? We said, if you do not give us the extra space, we will vacate the property. So, we negotiated. Because of the negotiation and because of the linkage with the third floor lease, we got the second floor at a much lesser rate, right? The rate is not commensurate with the standalone price in the market. In that case, it will not be considered as a separate lease. Then, we will consider that as a modification of an existing lease and we will do the accounting accordingly, okay? So, if the modification does not qualify as a separate lease, then you will remeasure the lease liability considering the revised lease rentals, the revised lease term and the revised discount rate, right? Now, whatever is the change in the liability, you will make a corresponding adjustment to the right of use asset, okay? So, this is the general accounting that you would do like we had done in the case of remeasurement of lease liability. But one thing that you need to keep in mind is, if at all there is a decrease in scope, that is to say, we have given up a part of right of use asset. Say, the entire third floor that we are occupying, we told the landlord that we don't need half of the space, take back 50% of the space. What has happened here? My right of use asset has come down by 50%. So, what the standard says is, if at all there is a decrease in scope, now decrease in scope can be giving up a right of use asset or reducing the lease term. Both of these cases are possible. So, if there is a decrease in right of use asset, then you have to proportionately reduce the right of use asset. You will have to reduce the lease liability considering the balance asset, and then whatever is the difference, first you charge that to P&L before remeasuring the lease liability. Now, what do I mean by this? Say for example, to keep it very simple, the entire floor was available to us at 1 lakh per month. We told the landlord, take back 50%, okay? Now, once the landlord takes back 50%, my right of use asset has come down by 50%. And say for example, the right of use asset in my books is at 20 lakhs, the lease liability is now shown at 24 lakhs, and on this date, I told the landlord, you please take back 50% of the right of use asset or 50% of the third floor, okay? Now, assume there is no penalty and related complication. What has happened on my side? I have given up 50% of right of use asset, which means the 20 lakh of right of use asset is now worth only 10 lakhs. So, what the standard says is, whenever there is a reduction in scope, first bring down the right of use asset proportionately. Simultaneously, you will also need to bring down the lease liability as well. Why? Because 50% of the lease liability is gone, correct? I have given up 50% of the right of use asset. So, 50% of the lease liability also would have gone. So, from 24 lakhs, bring that down to 12 lakhs. So, what has happened here? Reduction in right of use asset is 10 lakhs. Reduction in lease liability is 12 lakhs. So, if you eliminate that from the books, what would you do? You debit the lease liability by 12 lakhs. You will credit the right of use asset by 10 lakhs, and this difference of 2 lakhs will be taken to P&L. It is like you are giving up an asset, you are giving up the corresponding liability, and whatever is the difference will be taken to P&L. Now, it is possible that instead of being a gain, there could be a loss as well when the liability is less and the right of use asset is at a higher number. Even in that case, you will have to charge the difference to the P&L. Now, what is the logic of reducing the right of use asset and liability and taking off to P&L? Say for example, today we went to the landlord and told that we don't need the third floor, okay, we want to vacate this property. There are some penalties involved, we will negotiate that and we will pay some penalty. That is a separate case, but assume for a moment we negotiated with the landlord saying that, we are in a difficult situation and, COVID times, this, that, and we want to just vacate this property. It is of no use to us. Please consider, you take back the asset and will not pay you any further lease payments, and the landlord also agreed given the difficult situations arising due to COVID, okay. Now, here, don't complicate this with the COVID related exemption, that we'll discuss separately. I'm just giving you an example. What have we done? We have given up the entire right of use asset and we have extinguished the entire lease liability. Now, how would you account for this in the books? You would simply debit the lease liability, you will credit the right of use asset, and whatever is the difference, you will take it to P&L, right? Now, in similar lines, if you are giving up even half of the asset, the same treatment would arise, right? So, for half of the asset, reduce the right of use asset by 50%, reduce the lease liability by 50%, whatever is the difference, that you charge it off to P&L or you credit it to P&L depending on whether it is a gain or a loss, okay. If extinguishment of liability is more, then there is a gain. If the liability is reduced by a lesser amount than the right of use asset, then there is a loss. Okay, so this treatment has to be done first before you remeasure the lease liability. Now, why would there be a case to remeasure the lease liability? Say on this date we gave back 50% of right of use asset. We have reduced the right of use asset and we have reduced the lease liability as well. Now, on this date, what the standard requires is, because there is a lease modification, then you remeasure the lease liability using the revised discount rate. So, if you revise the discount rate, again there will be a change in lease liability, correct? That change in lease liability will be adjusted against our right of use asset. It will not be taken to P&L. So, the only complexity here that you need to understand is, if there is a reduction in scope, either because of reduction in right of use asset or because of reduction in lease term. We will take problems for both of these so that you have absolute clarity on how to do the accounting treatment. But concept that you need to understand is, if there is a reduction in scope, first reduce the right of use asset and reduce the lease liability proportionately, okay, and then whatever is the difference that arises because of this reduction, that you take it to P&L. After that, you carry out a remeasurement of lease liability and then adjust the right of use asset accordingly. Now, there could also be a case that though we gave back 50% of the right of use asset, the landlord would say, okay, from 1 lakh, I'll bring down the rental only to 60,000. Okay, I'll not bring it down to 50,000, I'll bring it down to 60,000. Again, this has to be remeasured using the revised discount rate, and the adjustments will have to be done to the lease liability and the right of use asset. Nothing will go to P&L. Okay, so in a nutshell, P&L will be impacted only if there is a reduction in the scope of lease. If there is a reduction in scope of lease, P&L would be impacted. Otherwise, P&L will not be impacted. Whatever is the remeasurement will be done to the lease liability. Corresponding adjustment will be done to the right of use asset. Now, I know there will be too much of adjustments, accounting and all of this, right from remeasurement to lease modification. We will summarize that in a simple chart which you can refer whenever you are facing a question related to either modification or remeasurement. Now, so far we have understood that there could be remeasurement of lease liability because the lease payments have changed based on existing terms and conditions, like variable payment changing, or the exercise of an option to extend the lease now being reasonably certain, or the changes in residual value guarantee, or exercise of a purchase option which has now become reasonably certain. Because of all of these things, there could be a change in lease payment, and there we remeasured the lease liability. Corresponding impact was given to right of use asset. Similarly, in case of lease modification which is not accounted as a separate lease, we need to remeasure the lease liability, and impact should be given to lease liability as well as the right of use asset, except and there was a slightly different treatment if there is a decrease in scope of the lease. Now, what we will do is we will summarize all of these into a simple chart so that if you get a question in the examination, it becomes easy for you to handle. So, now whenever you are faced with a question in the examination or when you are solving the questions, the thing that you need to ask is there a reduction in scope? Now, why am I starting with the reduction in scope? Because it is the reduction of scope where you will have to first bring down the right of use asset and lease liability. The question is there a reduction in scope? If the answer to this is yes, you are saying yes, there is a lease modification which is a reduction in scope. Reduction in scope meaning either there is a reduction in the right of use asset or there is a reduction in the lease term. In both of these cases, if there is a reduction in scope, the first thing that you would do is you would reduce the right of use asset and lease liability proportionately. How to do that when a right of asset is given up or the lease term is changed? We will do that when we do an example properly, but understand that if there is a reduction in scope, you will reduce the right of use asset and you will reduce the lease liability. And after this, there may be a need to remeasure which you will carry out independently. Okay. Now, if there is no reduction in scope, then you have to check whether the lease modification qualifies to be accounted for as a separate lease. Okay. If there is no reduction, then there could be an increase. Okay. There could be an increase. Now, that increase also, it may qualify as a separate lease, it may not qualify as a separate lease. So, the next thing that you need to check is, does it qualify as a separate lease? If the lease modification qualifies as a separate lease, you will account for it separately. There is no confusion in that as well. But if it does not qualify as a separate lease, then you will do the remeasurement. Even when there is a reduction in scope, even in that case, you may need to do remeasurement because the discount rate might change or the future lease payments would have changed, right? So, based on that, you may have to do the remeasurement. Okay. So, if there is a reduction in scope, you will reduce the right of use asset and lease liability. Difference goes up to P&L. Then the next question is, does the lease modification qualify as a separate lease? If yes, then you do a separate accounting, no confusion there. If no, then you will have to do the remeasurement. Okay, so even this reduction will be flowing through remeasurement and other changes would also flowing through remeasurement. Now here when I say remeasurement, I am talking about both remeasurement due to lease modifications and remeasurement due to other changes that you have discussed earlier. So you have to do the remeasurement. Now the thing that you need to ask in case of remeasurement is, do we need to take the revised discount rate or original discount rate? Okay, this is the most important part. Once you are clear with this, then there is no problem at all. When you are looking at the remeasurement, do we need to use the original discount rate or the revised discount rate? Now, when do we use the revised discount rate? First, if it is a lease modification, means there is either a change in scope or consideration which is not a part of original terms and conditions. If that is the case, then you will use the revised discount rate. So, whenever there is a lease modification, blindly you can use the revised discount rate. And in the earlier case, we said that whenever there is a change in lease term or the exercise of purchase option now being reasonable certain, even in these two cases, you will use the revised discount rate. And lastly, variable payments that depend on a floating rate, even for that case, you will use the revised discount rate. The last part is generally not tested in the examination. If you are clear with lease modification, change in the lease term or exercise of purchase option, in these three categories, you will use the revised discount rate. In other cases, you will use original discount rate only. Okay, so original discount rate would be used if it is a payment based on an index or a rate other than a floating rate, or variable payments now becoming in substance fixed lease payments. In these cases, you will use the original discount rate. Also, if there is a change in residual value guarantees, in that case also you will use the original discount rate. Now, if this entire chart is clear to you, okay, first check for reduction. If there is a reduction, what should be the accounting? If there is no reduction, then check whether the lease modification qualifies as a separate lease. If it does not qualify as a separate lease, then you will carry out the remeasurement. And when I say remeasurement, remeasurement is for lease modifications, that is change in scope as well as change in consideration, and remeasurement is also for change in lease payments based on existing terms and conditions. In both these cases, I put them into a single bucket called remeasurement. Now, when you are doing a remeasurement, you have to see whether you have to use the revised discount rate or the original discount rate. Okay, so in examination, whenever you are faced with a question where either the lease payments have changed or the lease term has changed or the lease terms and conditions have changed, there is a modification of the lease, you simply refer to this chart, you will be able to handle the question in the examination. Now, whenever there is a remeasurement, what should be the accounting entry? The accounting entry would be, if there is an increase in liability, there will be a corresponding increase in right of use asset. If there is a decrease in liability, there is a corresponding decrease in right of use asset. Nothing will go to P&L. The amount that will go to P&L is only for the reduction in scope of lease. Okay, if at all there is any difference which arises when you reduce the right of use asset and the lease liability, that will go to P&L. Other than that, all the adjustments will be done in the lease liability and the right of use asset only. If you are clear with this and clear with the next problems that we are solving on modification of lease, let me tell you, you are through with a major headache of this particular chapter, right? So, having understood this, let us look at few problems and solve them to get clarity on how to account for modification of lease, and when do we remeasure, when do we reduce, what should be the treatment, what should be the discount rate, all of those aspects. Let's have a look at another question. Now, in this question, we'll look at both a reduction in scope and also a increase in scope at the same time, right? And once you're done with this problem, you'll be pretty much confident to handle questions related to lease modification in the examination. Let's have a look at the question. Lessee enters into a 10-year lease, again a 10-year lease for 2000 square meters of office space. Okay, annual lease payments are 1 lakh, payable at the end of each year. Okay, the interest rate implicit in the lease cannot be determined. Okay, lessee's incremental borrowing rate at the commencement is 6%. So now by now you should be very clear. Even in the exam, if they ask you 6% discount rate for 10 years, annuity factor will be 7.46. Okay. At the beginning of year 6, lessee and lessor agreed to amend the original lease too. So there are two amendments. Okay. First, include an additional 1500 square meter of space in the same building starting from beginning of year 6. So you are adding 1500 square meter of space, and reduce the lease term from 10 years to 8 years. So two things have happened. One, you have taken additional space on lease, and second, you have reduced the scope of the lease by reducing the lease term from 10 years to 8 years. Now, the annual fixed payments for the 3500 square meters is fixed at rupees 1,50,000 payable at the end of each year from year 6 to year 8. So, What is the revised rental for 3500 square feet of space? It is 1,50,000. Now, do you think it is commensurate? If you see 2000 square meters is at 1 lakh, okay, which means 500 square meters should be at 25,000. So, 1500 square meters should be at 75,000. So, instead of 1,50,000, it should have been 1,75,000 if you look at the commensurate rate, okay. Reading further, lessee's incremental borrowing rate at the beginning of year 6 is 7%, okay. The consideration for the increase in scope of 1500 square meters of space is not commensurate with the standalone price for that increase adjusted to reflect the circumstances of the contract. So, maybe because the lessee took up an additional space, he would have got some discount, but not a discount to the extent of 25,000 on a lease payment of 1,75,000, right. There is a huge discount. Instead of charging extra 75, the lessor is charging only extra 50,000, which means the increase in scope will not be accounted for as a separate lease contract because the increase in consideration is not commensurate with the standalone price of the increased scope. See, the scope has increased from 2,000 to 3,500. For additional 1,500, 50,000 is not commensurate. That is what the question means, okay. And that means we will not account for it as a separate lease. We will have to consider it as a modification of existing lease. Consequently, lessee does not account for the increase in scope that adds to the right to use an additional 1,500 square meters of space as a separate lease. So, we are not accounting for it as a separate lease. How should the said modification be accounted for? So, now if you see here, there are two things that happen. One, a reduction in scope because you have reduced the term from 10 years to 8 years, and second, there is an increase in scope because you have increased the area. Now, the question is, which one should be considered first? Because if you remember, whenever there is a decrease in scope, we have to first reduce the ROU asset and the lease liability proportionately, and we have to adjust them, and if there are any differences, that will be taken to P&L. Right, that is accounting for decrease in scope, and the other part is a normal modification in scope, which will be the remeasurement of lease liability and corresponding impact to ROU asset. Now, which one should be done first? See, first you have to take care of the existing contract. What is the existing contract? Existing contract is 2,000 square meters for a period of 10 years. Now, that 10-year period you have reduced it to 8 years. So, first you have modified the existing contract, you have reduced the scope of existing contract, that you should consider. Then you should consider the increase in scope of the lease by adding additional space, that is a new space for the balance period of 3 years. So, what you should not be doing is first consider the increase in scope, because the increase in scope is only for a 3-year period, it is not for the 5-year period, right. So, always first look at the existing contract and see what has reduced in that particular contract. What has reduced? The term has reduced. So, first account for the reduction in scope and then look for the increase in scope. So in this problem, we will have to calculate the right of use asset and lease liability till the end of year 5, right, and then calculate what is the reduction in scope, then arrive at the revised lease liability, then remeasure the lease liability considering the increase in scope, and then again do the adjustment to arrive at the final balances. A long problem, we will follow step by step approach, and you will be pretty confident by the time we reach the end of this particular problem. So, now because the lease payments are same as the earlier problem, I will not be doing the entire computation once again. You can do it for a practice. It does not add much value because it is just a repetition of arithmetic calculations, right. So, the lease term initially agreed was a 10-year period at a lease rental of 1 lakh, and the incremental borrowing rate is 6%. The revised terms and conditions of the lease from beginning of year 6 is balance period of 3 years at a lease rental of 1,50,000, and the incremental borrowing rate is 7%. Obviously, the square feet has increased. Here it was 2,000, so I will just add the area also. Area, here it was 2,000 SFT, and revised area is 3,500. And the revised area is 3,500 SFT, right. So, this is what is the gist of the problem. Now, as far as the calculation of ROU asset and lease liability at the commencement of lease is concerned, it is same as the previous problem. So, you get 7,36,000 of right of use asset and lease liability. Then, right of use asset balance at the end of year 5 is 3,68,000, what we have computed in the previous problem, the same amount, and also the lease liability closing balance is 4,21,224, the same thing what we have computed in the previous problem. Okay. Now, till here the solution remains the same. After here is where the solution changes. Now, first, as I told you, we will have to give the impact of decrease in scope. First, we have to give the impact of decrease in scope. Now when we have to give the impact of decrease in scope, what we need to see is by how much has the scope reduced and proportionately reduce the right of use asset and the right of use liability. Now what do I mean by that? Balance of right of use asset at the end of year 5 is 3,68,000. This right of use asset is for how much period? It is for a 5-year period. Now we have reduced the lease term to balance 3 years. Means now the right of use asset is available with us only for a 3-year period and not for a 5-year period. So there is a reduction of right of use asset to the extent of 2 years of use. So what you do is reduction in ROU asset proportionately. What do you mean by proportionately here? This 368 represents 5 years, right? This represents 5 years. Reduction has happened for 2 years. So basically 368 divided by 5 multiplied by 2, this is the reduction. 1,47,200 is the reduction in the value of right of use asset, which means revised balance in ROU asset would be 368 minus 1,47,000, which is 2,20,800. Now the other thing what we need to do is to reduce the lease liability. Now tell me one thing, when we reduce the lease liability, again here also do we say that 421,224 is for a 5-year period? Okay. So for a 2-year period, the reduction should be 421,224 divided by 5 multiplied by 2. Do we do this kind of calculation? Do we also reduce the liability proportionately by considering the number of years, like we did in case of reduction of area, where we said, ROU asset is reduced by 50%, the lease liability also is reduced by 50%. Now there, where we spoke about reduction in one or more right of use asset, where we gave up 50% of the area, obviously the future payments also would have ideally gone down by 50%. So the lease liability also had gone down by 50% because the term had not changed. Here the term is changing. So because the term is changing, the present value calculations will also change. So you should not do a mistake saying that because here I have reduced it by 2/3, the lease liability also will be reduced by 2/3. That is not what you should be doing. What you should be doing here is, for the remaining 3 years, had the original contract continued at 1 lakh per year, what should be the present value of that liability? So when you compute the revised lease liability, original 2000 square meters, what you need to do is, for this 2000 square meters, what is the lease rental I need to make? So lease payment is 1 lakh. For how many years? Balance here is 3 years. Okay. Discount rate. What should be the discount rate? Again, I am looking at it from my reduction in scope of original contract. I am not looking at the increase in scope part. I am still looking at the reduction in scope part. My reduction in scope is the balance 5 years has now come down to 3 years period. I'll assume that I'll have to continue to pay 1 lakh for the reduced lease term because I am not yet considering the increase in scope part, and the discounting factor is still 6% because there is a reduction in scope. I am assuming if my original contract were to continue for the reduced term, what should have been the lease liability? So my discount rate here also will be 6%. Right? Now what will be the lease liability? This all calculation is as at beginning of year 6. What will be the present value? So basically you need to know the present value annuity factor for 6% for a 3 years period. 6% for a 3-year period, what will be the present value annuity factor, and based on that you will compute what would have been your lease liability because of the reduction in lease term. Okay, so what is the present value annuity factor? Let's calculate. So we have 1.1 divided by 1.06 once, twice, thrice, and if I do a grand total I get 2.673. So 2.673 is the present value annuity factor, right? So present value of lease payment will be 1 lakh multiplied by 267,300. Now what does this mean? This means, or what does this represent? This represents my revised lease liability on account of reduction in scope. I am repeating once again. See, my original contract was 1 lakh of payment for 5 years at 6%, right? This was the original contract. Okay. Now I have reduced the scope of this contract. Now what I need to calculate is, because of the reduction in scope, what will be my revised lease liability considering 2000 square feet for a 3-year period. That is what I am calculating. This is the same way we had calculated in the reduction in area as well. There also, if you remember, I had done 2 calculations. One, by considering the future payments for the reduced area, what should have been the lease liability, which was nothing but equal to the 50% of the closing balance of lease liability. Now there, because it was a reduction in area and not in lease term, we could directly take 50% of the lease liability. Here we cannot do this because we are reducing the term, and because we are reducing the term, the present value calculations would obviously undergo a change, because the discounting for 4th year and 5th year would be a much smaller number, so the adjustment to the liability will not be in proportion to the reduction in number of years. Okay, so now here if we calculate the present value of 1 lakh for a balance period of 5 years at 6%, what would we get? Let me just do the calculation. Present value of 6% for 5 years for a payment of -1, you get 4.2124. Okay, so if I multiply this, so 4,21,236 would have been the lease liability if I consider 5-year period. But now, because I am only considering 3-year period, the lease liability comes to 2,67,300. Okay, so if you compare this number 421,236, and if you compare with this number that we had calculated, it is 421,224. The difference is because of rounding off. Okay, so there are 2 ways to calculate, as I told you. It can be this way or it can be this way. Both of the ways are acceptable, right? Now here, what is the reduction? The reduction is 421,236 minus 267, which is 153,936. This is the reduction in lease liability and not this number that we had calculated. Okay, so don't do the mistake saying that for a 5-year period the liability is 421. So for a 2-year period the reduction should be by 1,68,000. That should not be the case. This is the amount by which it is reduced. So this is the reduction. This is the reduction in lease liability. Now once we have known what is the reduction in lease liability and what is the reduction in right of use asset, you need to pass the journal entries, and any difference will be taken to the P&L. Any difference will be taken to the P&L because it is as good as terminating that part of the contract. Terminating that part of the contract. So let us summarize here. Let us summarize here. At end of year 5, what is ROU asset and what is lease liability? Okay, what is ROU asset at end of year 5? We had calculated it here, which was 3,68,000. Lease liability was 4,21,224. Okay, then revised balance. What is the revised balance? This is after reduction. Revised balance after reduction. What is the revised balance after reduction? For right of use asset it is 220,800 and for lease liability it is 267,300. Okay. So what is the difference? Difference is 368 minus 220,800, 147,200 and 153,924. Now what do? You will reduce the right of use asset balance by 1,47,200. You will reduce the lease liability balance by 1,53,924 and the difference will be debited or credited to P&L. Here reduction in liability is higher amount, so the difference will be credited to P&L. So the journal entry will be lease liability debit by 153,924 to ROU asset credit by 147,200 and the balance goes to P&L, which is difference between these two. So basically 6,724 is the gain which is recognized because of reduction in scope. So this takes care of the first part of the problem, which is reduction in scope. Now we have handled the aspect related to reduction in scope, and what is the second thing that has happened? There is a lease modification which is an increase in scope. Now is that increase in scope to be accounted as a separate lease component, or it has to be accounted as if it is a modification of existing lease arrangement? So for an increase in scope, if it has to be accounted for as a separate lease component, then you must ensure that the increased lease consideration is commensurate with the standalone price of the increased scope. Here, as we understood that the lease rental for 2000 SFT, this was the area, and the lease payment is 1 lakh. Okay, then so for additional 1,500, how much should be the lease payment? it should be 1 lakh divided by 2000 multiplied by 1500. Additional consideration should have been 75,000, but whereas additional consideration is only 50,000, and the question itself says that this is not commensurate. Okay, I am just showing the calculation for your understanding. The question itself says that the additional consideration is not commensurate with the increased scope, which means this is not to be accounted for as a separate lease. This will be accounted for as a modification of existing lease. Okay, so you will remeasure the lease liability using the revised discount rate. You will remeasure the lease liability using the revised discount rate. So what is the remeasurement? You will remeasure considering lease payments of 150. Term is 3 years, correct? Discounting factor. The discounting factor changes to 7%. Why does it change to 7%? Because there is a lease modification, and we know that whenever there is a lease modification, it has to be remeasured using the revised discount rate. Okay. So, for this you just need to calculate the present value annuity factor of what? Of 7% for a period of 3 years. Let's do that. 1 divided by 1.07 once, twice, thrice, and you do a grand total, you get 2.6243. So, what is the present value of lease payments? Present value of lease payments is 1,50,000 multiplied by 2.6243, you get 3,93,645, right. Now this is the lease liability arrived at after considering the increase in scope. So, lease liability considering increase in scope. Okay. Now, what do we do with this? What does this 393,645 represent? This 393,645 represents lease liability considering increase in scope, meaning to say, because you have increased the scope from 3,500 square meters and for a period of 3 terms, this would be the revised lease liability. Now, what is the lease liability after reduction in scope? Lease liability after reduction in scope is this one, which is 267,300. Okay. This is the lease liability after reduction in scope. This lease liability you will compare with this particular lease liability, and any difference in this lease liability will be adjusted to right of use asset. So, what do I mean by that is, lease liability after reduction in scope was how much? It was 267,300. Okay. Revised lease liability after increase in scope. Now, here reduction in scope is because of term, here increase in scope is because of area. Okay. So, what is the revised lease liability? 393,645. Now, the difference between these two, that is 1,26,345, will be adjusted to ROU asset. So, the entry will be ROU asset debit 126,345 and to lease liability 126,345, right. So, this will be the adjustment to right of use asset and the lease liability. Now, there is another way to calculate this number, that is to split the change in liability because of increase in interest rate and because of revised payments. So, what do I mean by that? I will just explain to you quickly, but this accounting treatment is sufficient for the purpose of handling the modification in the lease. Now, if you have to understand, because of modification, what has changed? Two things have changed. One, the discount rate has increased from 6% to 7%, meaning to say, on your existing 1 lakh payment, the discount rate is now 7% instead of 6%. So, this will definitely result in reduction in the lease liability. And the second thing that has happened is, additional 50,000 has to be paid, and if you arrive at the lease liability at 7%, you will get an increase in lease liability. So, two things have happened. For existing payment, okay, lease payments is 1 lakh. So, existing meaning for existing area occupied, which is 2000 SFT. Present value annuity factor, if you consider 6% for 3 years, and if you consider 7% for 3 years, the lease liability would change. What is the present value annuity factor considering 6% for 3 year period? We had already calculated, right? Present value annuity factor 6% for 3 years is 2.6730. Based on this, what will be the lease liability? Based on these, the liability will be 1 lakh multiplied by 2.6730, 267,300. Now, the discount rate has changed because there is a lease modification. So, if you give that impact, what will be the present value factor? We had calculated it here, 2.6243, not a major difference, but still there is a difference. Now, Now considering this, the lease liability will be 1 lakh multiplied by 2.6243, you get 262,430. What is the difference between these two? The liability has reduced by 4870. So there is a reduction to the extent of 4870. Then there is an increase in liability because of increase in lease space. Okay, so what is the payment related to that? I can just pick up here directly. Lease payments is 50,000, right? Then you have to consider the present value annuity factor 7% for 3 years. That comes to 2.6243. So 50,000 multiplied by 2.6243. There is an increase to the extent of 1,31,215 because of the lessee occupying additional space. So net increase, if you see, which is 1,31,215 minus 4870, you get 126,345, and I think that is what we have got, right. So this is a breakup of the increase and decrease. You are not required to do it that way, because what the standard requires is whenever there is a lease modification, you just need to remeasure the lease liability considering the revised discount rate. So this computation is fine, fair enough. You don't need to worry about breaking them down, right. Now by solving these 4 problems, I am pretty sure you are confident of handling anything related to lease modification in the examination. Again, to quickly revise, when you read the question, you have to check, is there a reduction in scope? If there is a reduction in scope, then you will have to proportionately reduce the right of use asset and the corresponding liability. Now when you are reducing the ROU asset and the liability, if it is because of reduction in area occupied or assets occupied, you can do directly a percentage reduction. But if it is because of a term, right of use asset will be reduced on the proportion of the term, that is for how many years you have reduced the term divided by the balance term. But whereas for the lease liability, you will do a fresh calculation of present value of lease payments. Okay, then whatever is the difference will be taken to P&L. If there is an increase in scope and it qualifies for being accounted as a separate lease, you will account for as a separate lease. Otherwise, you will do a remeasurement of lease liability and corresponding impact will be given to right of use asset using the revised discount rate. If you are clear with this, I don't think you will face any problem in one of the critical aspects of this standard. So, I have already seen a problem where we remeasure the lease liability based on the changes as per existing terms and conditions. Now, we will look at few examples based on lease modifications and see how do we do the accounting for each of them. Let us have a look at the question. Now, as we read the question, we should be able to figure out what should be the accounting treatment and how should we be computing those aspects, right. Lessee enters into a 10-year lease for 5,000 square meters of office space. The annual lease payments are 1 lakh payable at the end of each year. So, they have clearly mentioned that the lease payments are at the end of each year. The interest rate implicit in the lease cannot be readily determined, and the lessee's incremental borrowing rate at the commencement date is 6% per annum. At the beginning of year 7, now it is a 10-year lease, and at the beginning of year 7 means 6 years have already gone by, we are standing at beginning of year 7. Very careful, be very careful while calculating the number of years. The lessee and the lessor agree to amend the original lease by extending the contractual lease term by a 4-year period. So, initially it was a 10-year lease. At the beginning of 7th year, both of them sat together and they said, okay, let us extend this by a 4-year period. Now, the total term, if you start from the commencement date, original commencement date would be 14 years. And how many years have passed by? 6 years have already passed by. The annual lease payments are unchanged, that is 1 lakh payable at the end of each year from year 7 to year 14. Lessee's incremental borrowing rate at the beginning of year 7 is 7% per annum. How should the said modification be accounted for? So, very simple question, nothing complicated. Just we need to refer back to our chart and see what should be the accounting treatment. Is there a reduction in scope? No, there is no reduction in scope. In fact, there is an increase in scope. Now, please note that a lease modification will be accounted for separately only if there is an increase in scope by adding one or more right of use asset. Are we adding another asset here? We are not adding another asset here. We are just extending the lease term. So, it will be as good as a remeasurement. Remeasurement of what? Remeasurement of lease liability and corresponding adjustment to right of use asset. How will you remeasure the lease liability? Standing at the beginning of year 7, you will look into the future and see how many payments are left. How many payments are left? 7th year, so 7th, 8th, 9th, 10th, 11th, 12th, 13th, 14th. 8 years payment are left. Don't do 14 minus 7 and consider 7 years. There are 8 payments to be made at the end of each year. That is the first aspect. The revised discount rate, 7%. and the lease payment of 1 lakh. Considering these three, you will measure the lease liability as at beginning of 7th year. Okay, so that you will get one number. You will also arrive at the lease liability based on the original lease at the end of 6th year or at the beginning of 7th year. You will compare these two, and whatever is the difference, you will adjust it to lease liability, and corresponding adjustment will happen on right of use asset. So what all are you expected to do here? First, based on the original lease terms, you will compute the lease liability as at the end of 6th year. That is the first computation. Also, right of use asset balance as at the end of 6th year. That is the first set of computation. Then you will compute the liability balance as at the beginning of the 7th year, considering the revised lease terms. You will get some amount. This amount minus the closing balance of lease liability will give you the increase in lease liability, which has to be adjusted to both lease liability and right of use asset. Okay, so that is a simple treatment. No P&L will be impacted, and you will use the revised discount rate only. So I have summarized the information given in the question. They have not given us date, so we can assume that the lease commences from beginning of year 1, and the year 1 itself is the financial year or the accounting period that we need to consider. The original term was 10 years, 1 lakh per year, payable at the end of each year at a rate of 6%, and after the modification, when it was made effective from beginning of year 7, we have 8 years left out. Out of that, in that 8 years, you will have to pay 1 lakh every year at the end of each year, and 7% is the discount rate. So what we need to do here, we need to identify what should be the revised lease liability at beginning of year 7. At beginning of year 7, what should be the revised lease liability? That is the first thing. Then we need to see what was the lease liability based on the original contract at end of year 6, and the difference between these two will be adjusted to the lease liability and the right of use asset. Now, as far as the question is concerned, it just says how should the modification be accounted for. For that, it is enough if we calculate how much is the change in the lease liability. So the lease liability will go up by that amount, and correspondingly right of use asset will also go up by that amount. But what we will do is, we will also compute the right of use asset balance and how much will be the revised right of use asset balance as well. Okay, so very simple question, nothing to be worried about. You just need to put the numbers at the right places and you will get the answers. Now, after the modification or at beginning of year 7, what will be the revised lease liability? Now, here if you see, beginning of year 7, when you consider, you have to make payments from at the end of year 7, right, and so on at end of every year. So, end of year 7, I will denote it by 1, 2, 3, 4, 5, 6, 7 and 8. You have 8 payments. You can just continue this 7, 8, 9, 10, 11, 12. You will get up to 14. How much is the lease payment? 1, 2, 1 lakh. So every period you have 1 lakh of lease payment. So the lease payments are 1 lakh every year. Then we need present value factor at 7%, right? So you can take 3 decimals, 4 decimals, rounded off. Those rounding off differences should not make much of a difference in your final answer, and some extent of rounding off is acceptable. So you need not worry about that. Okay. So how much will be the present value factor? 1 divided by 1.07, that is for the first period, you get 0.935. Okay, that's what is being displayed on the screen. There could be a rounded off thing here and there. Then this divided by 1.07, 0.873, 816, 763, 713, 666, 623 and 582. Okay, so if I just increase this, you will get the number. Now, these are the actual numbers till 4 digits. It keeps on extending. So what you can do is, you can take the round of numbers for, let us say, 3 digits. Okay, so these are the round of numbers. I will just replace these here. What is the present value? 1 lakh multiplied by 0.9350. So like this you can do it for every period. You get the present value, and when you total this up, you get 5,97,100. Okay, now this is the lease. So this is the revised lease liability, 5,97,100. Now in examination, you need not prepare this schedule all over again. What you can do is, because it's an annuity, you can directly take present value annuity factor of 7% for 8 years. And how to calculate that? Take your calculator, 1 divided by 1.07, do the calculation 8 times, hit GT, you will get the summation, or 1 divided by 1.07 equal to m plus, do it for, repeat it for 8 times, do the memory recall, you will get the present value annuity factor. So you can directly take present value annuity factor of 7% for 8 years, you get 5.9713. Okay, so if you round it off, you get 5.971. So that is what is the number you get on the screen, right? What is important is, you should know how to calculate. That rounding of decimals here and there will not make a difference. Now what is this? This is the revised lease liability. This is the revised lease liability at beginning of year 7. What we also need to calculate is, as at the beginning of year 7 or at the end of the 6th year, what is the lease liability? That is to say, you started from year 1, at year 1 you would have recognized the lease liability and right of use asset, correct? Now, using that lease liability and right of use asset, you have to arrive at the closing balances of lease liability as at the end of year 6. Okay. Now, again there are two ways to do this. At end of year 6, considering original terms, what would have been the lease liability? The lease liability would have been is equal to the present value of remaining lease payments at 6% for how many years are left? 7, 8, 9, 10 for 4 years. Okay. So, if you calculate the present value of 1 lakh for the remaining 4 years, you will arrive at the closing lease liability. This is one way to calculate that. So, how much will that be? Present value annuity factor at 6% for 4 years. That is what you need to calculate. That is present value 6%, 4 years. You get 3.4651. Okay. So, you can consider 3.465 if you want to round it off. Right. What is the annual lease payment? Annual payment is 1 lakh. So, what is the lease liability? At end of year 6, it is nothing but 1 lakh multiplied by 3.4651. You get 3,46,510, or you can round it off to 346,500. Okay. This is the lease liability at the end of year 6. Now, what you need to do is, the revised lease liability is 597,100 and the original lease liability at the end of year 6 is 346,500. Difference is 597,100 minus 346,500. This difference will be adjusted. Adjusted to what? You will increase ROU asset and you will increase lease liability. Okay. Now, what will be the entry for this? Right of use asset debit to lease liability 250,600 and 2,50,600, right. So, this is how you will remeasure the lease liability and adjust them to lease liability as well as right of use asset. Okay. There is nothing going to P&L because there is no reduction in scope. This is not accounted for separately because this is a modification in lease term and not addition of another right of use asset, and hence we are considering these to be a change in the existing lease liability, right. Now, this part that we calculated, right, at the end of year 6, what should have been the lease liability? That can also be done by preparing a lease liability schedule. Let us look at that. So, what are you doing? Calculation of lease liability at commencement and at year 6. Okay. How do we calculate it at commencement? You will take lease payments. Lease payments is 1 lakh. Then discount rate is 6% and term is 10 years. Okay. Now, what you need to do is, you need to calculate the present value of 1 lakh at 6% for 10 years. Okay. So, by using calculator, what you can do is, what I prefer is this kind of a calculator, which is you get in the Citizen model, also in the ORPAT model. Casio is fine. Okay. If you are used to Casio, no need to change it. This is what I found it slightly more effective in calculating these, present values and doing grand totals and all of those things. But nonetheless, you can use Casio and use an M plus MRC function. That's perfectly fine. Okay. Now, what do we need to do? We need to calculate the present value annuity factor for 6% for 10 years. Okay. So, simply 1 divided by 1.06. So, the first year factor comes to 0.9433, right. So, I have done it once. I pressed equal to once. Then you can just press equal to twice, thrice, 4, 5, 6, 7, 8, 9, 10. Okay. So, you get the 10 years individual present value, then you just press this grand total here. Okay. So, you do grand total, you get 7.3600. Okay. You get 7.3600. So, present value factor is 7.3600. So, you can take 7.36. I can use Excel also. I have the comfort of that. Is equal to present value 6% for 10 years for a payment of -1, you get again 7.36. Okay, just to show you that either ways you calculate, you will get the same number. See, there will be a rounding of difference. I am not saying no. Okay, if you take individual present values and then compute, you will get a difference. 100, 200 difference would be there, but you should not be worried about that. And in most of the cases, you will get the present value factors in the examination, and you should not be worried about that as well. Now, the reason why I am explaining you these calculations in detail here is, we will be using these calculations in future chapters also. So there, by the time you reach the future chapter, you should know what is to be done, and in examination, you should be able to save time. See, even if you save 5 minutes, you can attempt another question worth 5 marks, right? So that is very, very important. So the lease liability at year 0, that is at the commencement of the lease, is 1 lakh multiplied by 7.36, you get 7,36,000. Okay. Now this 7,36,000 you can get by preparing a table also, but I don't suggest you do that unless it is asked in the question or unless it is not an annuity related question, right? Now what do we do? The 7,36,000 of lease liability we will increase with the interest and we will reduce with the lease payment. Calculate the closing balance at year 6. Now what is the opening balance? Opening balance is 7,36,000. How much is the interest? Interest at 6%. So 7,36,000 multiplied by 6%. How much is the payment? Payment is 1 lakh at the end of the period. What is the closing balance? 736 plus interest minus payment, you get closing balance of 680,160. Okay. So you can repeat this for 6 years. Opening balance, interest, payment, closing balance, 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 opening balance, interest, payment, closing balance. You get 346,498. How much did we get above? We got 346,510. We rounded off to 346,500. This also you can round it off to 346,500. Okay. Now, considering this lease liability, you will compare the revised lease liability. How much was the revised lease liability? We have done it here. Revised lease liability is 597,100. So, what is the difference? Difference is 597,100 minus 346,500. This will be added to right of use asset and this will be added to the lease liability. Now, looking at the right of use asset, what is the opening balance or ROU asset at commencement would have been how much? Your 7,36,000. Okay. Then depreciation for 6 years. Why 6 years? Because revision is happening from beginning of 7th year. So you have to consider it 6 years. Considering straight line method, 736 divided by 10 multiplied by 6. You get 441,600. Closing balance at Y6 or beginning of year 7 is 736 minus 441,600. You get 294,400. Now to this you will add increase in lease liability. How much is that? Increase in lease liability is 256,600. So revised balance of ROU asset will be 294,400 plus 256,600, which is 5,45,45,000. Okay. So the lease liability closing balance may be different from the right of use asset closing balance or the revised balance. It's absolutely fine. Now this 5,45,000 will be depreciated over a period of 8 years. Okay. So this is how you will account for lease modifications when it is not accounted for a separate lease. Please note, it will be accounted for a separate lease only if you have added a right of use asset or assets and the increased consideration is commensurate with the standalone price of the increased scope. Now, one thing that you need to keep in mind is some authors what they have interpreted is even this increase in lease term, if it is commensurate with the market rate, should be accounted for as a separate lease, but the standard wording and the interpretation of IFRS, the example 16 used in IFRS has explanation, all of that make it very clear that lease modification as a separate lease will be accounted only if you have added another right of use asset. If it is a modification of lease term, you will not consider it to be a separate lease component, you will actually consider it to be a modification of existing lease contract. Let's look at another question. Lessee enters into a 10-year lease for 5,000 square meters of office space. The annual payments are 50,000 payable at the end of each year. So that's very clearly given. Interest rate cannot be determined. Lessee's incremental borrowing rate at commencement is 6%. Now, At the beginning of 6th year, lessee and lessor agreed to amend the original lease to reduce the space to only 2500 square meters of the original space starting from the end of the first quarter of year 6. So, basically from beginning of year 6. Okay. So, that is how we can interpret it. Then, the annual fixed lease payments from year 6 to year 10 are 30,000. Lessee's incremental borrowing rate at the beginning of year 6 is 5%. How should the said modification be accounted for? Now, here, similar to the example that I was giving about our office space, we said we have given up 50% of the space, but you see the lease rentals have not come down by 50%. The lease rentals are actually have come down only by 40%. So, here two things have happened. You have given up a right of use asset and then there is a change in consideration as well. So, the first thing that you need to ask is there a reduction in scope? If you can look at it from 5000 square meters to 2500 square meters, there is a reduction in scope. So, if there is a reduction in scope, first thing that you need to do is reduce the right of use asset and the lease liability proportionately, and any difference should be charged off to P&L. After you finish this activity, then you calculate the revised lease liability based on the revised payment of 30,000, the balance lease term of 5 years because from year 6 to year 10 and the revised discount rate of 5%. Then you will recompute the lease liability. This lease liability you will compare with the reduced lease liability, and any difference between these two will be adjusted against lease liability and right of use asset. Okay. So, it is very important that you understand this part whenever you are dealing with reduction in scope. Okay. Now, there could be a reduction in term as well, that will come to it separately. Here we are only talking about reduction in scope of the lease as far as the asset is concerned. Okay. Now, we will again note down the important aspect of the question and we will proceed with the solution. So, to proceed with this problem, let us calculate the lease liability at commencement, the right of use asset at commencement as well, because we need to know what will be their balance at the end of the 5th year, and based on that we will have to reduce both right of use asset and the ROU liability. The first thing you need is the present value annuity factor at 6% for 10 years. See, the original term is 10 years. So, you need the present value annuity factor at 6% for 10 years. So, again you can use a calculator. 1 divided by 1.06, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and if you do a grand total you get 7.36. Actually we calculated it in the earlier problem also. Okay. So, you get 7.36. 008, so I can consider it to be 7.36 as a rounded number. Then lease payment is 50,000. Okay. So, present value of lease payments for 10 years is nothing but 50,000 multiplied by 7.36, you get 3,68,000. 3,68,000. What is it? 3,68,000. This is ROU asset at commencement is 3,68,000 and lease liability at commencement 3,68,000. See, once we understood the logic, now we can calculate it faster. No need to prepare the entire table and check your workings and all of those things. Okay. The earlier detailed calculations were for you to understand how do we calculate and what is the logic. Now you can directly skip some steps and save time in your examination, right? Now this is the ROU asset at commencement and lease liability at commencement. Now what do we need to know? We need to know the ROU asset balance and lease liability balance at the end of year 5 or at the beginning of year 6. Okay. So, balance of ROU asset and lease liability at end of year 5 or beginning of year 6. Now, to calculate the ROU asset and the lease liability at the end of year 5, there are two approaches. ROU asset is very simple. Every year you charge same depreciation, you will get the closing balance. As far as lease liability is concerned, you can follow two approaches. One, prepare the lease table, calculate the interest and the closing balance. Second option is calculate the present value of remaining lease payments at the end of year 5. Okay. Even if you have to recompute the present value of balance lease payments, you will have to calculate the interest factors and all of that. So, for calculating lease liability at the end of year 5, you can prepare the normal table that we are preparing for interest amortization, that is fine. Or if you are comfortable with calculating the present value using the balance lease payments, that is also perfectly fine. Okay. So, right of use asset at commencement is 368,000. Depreciation for 5 years will be how much? 368 divided by 10. Because the useful life is 10 years, you divide it by 10 and multiply it by 5, you get 184. So, the closing balance is 368 minus 184, 1,84,000. So, ROU balance as on beginning of year 6 is 184,000. Okay, this is one part. For lease liability, we can prepare the schedule. You can place year here, opening balance, interest at the rate of 6%, right, payment and closing balance. Very simple. 1, 2, 3, 4, 5 years. What is the opening balance? Opening balance is 368,000, right? So now you have the opening balance at 3,68,000, interest at 6%. So 368 multiplied by 6%, you get 22,080. Payment is 50,000. So opening balance plus interest minus payment, you get 3,40,080, right? Then opening balance 340,080, interest, payment, closing balance, opening balance, interest, payment, closing balance, opening balance, interest, payment, closing balance, opening balance, interest, payment, closing balance. You get 2,10,612. This is the closing balance of lease liability. The other way to calculate that is present value of 50,000 for 5 years. Why for 5 years? Because you are paying 50,000 for the next 5 years and you have to discount that at 6%. So you can do this and also calculate. So you need to calculate the present value annuity factor 1 divided by 1.06, 1, 2, 3, 4, 5. You get 421,236. So 4.2123. I can take up to this many decimals. So the value will be 550,000 multiplied by 4.2123. So that comes to 2,10,615. A small rounding off difference. Okay. So either ways you can do it. It's perfectly fine. Now the most important question is, because there is a reduction in scope, we said we have to proportionately reduce the ROU asset and the lease liability. What do I mean by proportionate reduction? See, what is my ROU asset balance? My ROU asset balance is 1,84,000. I have given up 50% of the right to use that asset. Means what? My right of use asset here has come down by 50%. So 50% of 1,84,000 I have to remove. I'll consider, so it's like I'll break the lease into two parts and one part I'll give it back to the landlord. So if I were to account for them separately, this part will be 50%, right? So out of 1,84,000, what is 50%? 184 multiplied by 0.5, you get 92,000. So basically this ROU asset which has a balance of 1,84,000, I'll divide it into two parts and say ROU asset worth 92,000, you please take back. Balance 92,000 will remain in my books. Correspondingly, you will also have to reduce the lease liability, right? Because your lease liability will also come down to that extent. Now a very important thing that you need to keep in mind is, my lease liability will come down because I have given up 50% of the asset, and along with it, what the landlord has done is, he has not reduced my rental to 25,000. He has reduced the rental to 30,000. Means there is a change in consideration for balance 50%. So first what you need to do is, you have to break the right of use asset into two parts, considering existing terms and conditions. So I have given back 50% of right of use asset which is worth 92,000, and I will have to extinguish my lease liability based on existing rental. Based on existing rental means what? If I divide the contract into two parts, then 25,000 worth of lease payment should have been avoided, correct? So considering that, you will reduce the right of use liability. Let us see what happens. Present value of 25,000 for 5 years at 6%. See, when I am reducing the scope of the contract, ideally based on the existing terms and conditions, 25,000 for the next 5 years would have been saved. Okay, so the factor remains the same. We have already calculated here 4.2123. So 25,000 multiplied by 4.2123 gets you 1,05,307. So what has happened here? If you see this divided by this, actually you are also extinguishing 50% of the liability. So in a nutshell, whenever there is a reduction in scope which involves giving up a part of right of use asset, proportionately reduce the right of use asset and correspondingly proportionately reduce the lease liability. So because 50% is given up, reduce 50% of right of use asset and 50% of lease liability. If 60% was given up, do it to the extent of 60%. Okay, this is only for reduction in scope due to giving up a part of asset. This will not be applicable when we reduce the term. There we'll have a different kind of calculation. So don't mix this with the reduction in lease term. Okay, that we'll understand separately. So for now, 50% of right of use asset is given up and 50% of lease liability is given up. So whether you take 210,615 and do the calculation or 210,612 and do the calculation, it will just be a difference of 1 or 2 rupees here and there. You should not be worried about that. So balances at end of year 5. Okay, you have right of use asset and you have lease liability. Okay, now what is the balance of ROE asset at the end of year 5? 1,84,000. What is the lease liability balance? I will take 210,615 or you can take 210,612 also. 615 will be easier for us to calculate. So I am taking 210,615 less proportionate reduction. Now what is this proportionate reduction? What is the proportion of scope of reduction in asset? In our case it is 50% because 5,000 was the original lease, now it is only for 2,500. So the proportionate reduction is 50%. So you will say 50% here. Okay. So 50% means this multiplied by 50% and this multiplied by 50% you will reduce. So revised balance after scope reduction. Okay, revised balance after scope reduction is 184 minus 92 and 210 minus 105. This is the revised balance. Okay. Now if you see here, my right of use asset has come down by 92,000, but my lease liability has come down by 1,05,307, which means there is a difference. This difference, that is this minus this, will be charged off to P&L. This will be taken to the P&L. Taken to the P&L means if it is a gain, you will consider it as an income. If it is a loss, you will consider it as an expense, right? So the entry will be debit lease liability debit. Why lease liability debit? Because you have to reduce the liability 1,05,307.5 to ROU asset, because right of use asset balance also has to be reduced 92,000 and the balance will go to P&L, that is 105 minus 92, 13,307 will go to the P&L, right. This is the first part. We have just covered reduction in scope. Let us now move on and remeasure the liability. Why remeasure the liability? See, there is a lease modification. Okay, because of lease modification, the rentals have changed. So we will have to remeasure the liability using revised discount rate and do the corresponding adjustments to the lease liability and right of use asset. Now for the modification of lease, see, reduction in scope we have already accounted for it and we have taken the gain to the P&L. Now for the balance modification, see, there is a reduction in scope and also there is a modification in lease payment, right. Now that, if you see the summary, now it is for a balance period of 5 years. Why? Because we have changed it at the beginning of year 6. So balance period of 5 years, 30,000 is the lease payment. Now the borrowing rate is 5% or incremental borrowing rate is 5%. The other rate is not available. So you will use 5% and arrive at the value of lease liability. So let us do that. So calculation lease liability revised considering lease modification. Okay, so what is the lease modification? Lease payment is now to be 30,000. Then lease term balance is 5 years. 5 years. Then discount rate. Discount rate. What is the discount rate? The revised discount rate is 5%. Okay. Now considering this, you will have to calculate the lease liability. So let us calculate present value annuity factor of 5% for 5 years. Okay. So now I will not be using Excel because that was for initial calculations. So we need to calculate the present value annuity factor of 5% for 5 years. So what is the present value annuity factor at 5% for 5 years? 1 divided by 1.05. 1, 2, 3, 4, 5. Do a grand total, you get 4.3294. Okay, so we can take 4.329. So 4.329 is the present value annuity factor. So what is the lease liability? The lease liability which is remeasured is 30,000 multiplied by 4.329. That comes to 1,29,870. Okay. Lease liability after reduction was how much? lease liability after reduction was 105,307. Okay, so there is a difference between these two. What is the difference? 129,870 minus 105,307, 24,562 is the difference. Now this 24,562 difference will be adjusted to the lease liability and corresponding adjustment will happen in right of use asset. So your entry will be right of use asset debit to lease liability. Okay, so right of use asset debit by 24,562 and credit lease liability by 24,562. So this will be the entry. So basically now your revised balance will be lease liability 129,870 and ROU asset revised balance would be 92,000 plus 24,562. You get 1,16,562. So this will be the ROU asset revised balance, one aspect, and this will be the remeasured lease liability. So if you have understood this, you have understood a major part of the lease modification and remeasurement. Whenever there is a reduction in scope, first adjust the lease liability and the right of use asset. Whatever is the difference, take it to P&L. Then do the remeasurement, and whatever is the difference, again adjust it to lease liability and right of use asset. Here nothing will be charged off to P&L or nothing will be taken to the P&L, right? So we have seen a case where there is an increase in term and we have seen a case where there is a decrease in scope. Now we will move ahead and see what would happen if there is an increase in scope and decrease in scope in the same transaction, and what would happen if there is a change in the consideration related aspect, right? And once you are done with those two problems, you will be pretty thorough in the aspects related to lease modification. So friends, let's have a look at another question on lease modification. A lessee enters into a 10-year lease for 5,000 square meters of office space. So they have taken a lease for 5,000 square meters of office space. It's for a 10-year period. At the beginning of year 6, that is at the end of year 5 or at the beginning of year 6, that's how you need to understand. Okay, why am I saying at the end of year 5? For us to calculate the lease liability and right of use assets. So at the beginning of year 6, okay, so I'll just highlight this, beginning of year 6, lessee and lessor agree to amend the original lease for the remaining 5 years. So originally period was 10 years. Now there is an amendment in some terms and conditions for the balance 5 years. The lease term is not reducing. Okay, the lease term is not reducing. The lease term remains to be 10 years. So what is the amendment? To reduce the lease payments from 1 lakh per year to 95,000 per year. Okay, so the lessor and the lessee, they agreed for whatever reasons to reduce the lease payments from 1 lakh per year to 95,000 per year. The interest rate implicit in the lease cannot be readily determined, and the lessee's incremental borrowing rate at the commencement date is 6%. So when the lease commenced, the incremental borrowing rate is 6%. So that will be the discounting factor. Lessee's incremental borrowing rate at the beginning of year 6 is 7%. So 6% is at the commencement, that is at year 0, when you initially recognize the ROU asset and the lease liability. Later on, when the lease was modified, the revised rate is 7%. The annual lease payments are payable at the end of each year. How should the said modification be accounted for? So lease payments are made at the end of each year. That's also very clearly given. How should we account for the modification? The first thing that we need to ask here is there a modification? Yes, there is a modification because the terms and conditions have changed. From 1 lakh, we have brought down the lease rental to 95,000. So definitely there is a modification in the lease. Now, is there any increase in scope? There is no increase in scope, so separate accounting goes out of question. Is there any decrease in scope? Did we reduce the right of use asset? No. Did we reduce the lease term? No. So there is no reduction in scope either. So the reduction in scope related accounting is also out of question. So it's a simple question to remeasure the lease liability and right of use asset. There will be no impact which will go to the P&L. Now when we remeasure the lease liability, do we take the original discount rate or the revised discount rate? Now here, because it's a lease modification, then we have to take the revised discount rate. Once you are clear with this, calculation is just a simple activity. Okay, so by the time you read the question, you should be in a position to understand, is there any reduction in scope? No. Okay, exclude that part. Is there any increase in scope requiring separate lease accounting? No, that's also out of question. So simple, remeasure the lease liability and corresponding impact goes to the right of use asset. Remeasure at what rate? Original rate or revised rate? At the revised discount rate. Okay, once you are clear with this, it becomes easy for us to solve the problem. So this is a pretty simple question based on remeasurement of lease liability on account of lease modification, right? So the original term is 10, the revised balance, the balance term after modification is 5 years. right? Effective date is beginning of 6 years. What has happened? Lease rentals or lease payments have been reduced from 1 lakh to 95,000. That is the only change, and whenever there is a change, we have to take the revised discount rate of 7%, a simple calculation of a lease modification, right? So, first let us do the calculation of lease liability and right of use asset at commencement. Again here, as I told you earlier, we will not be preparing a detailed schedule. We can directly do a present value annuity factor computation. Okay, so present value annuity factor for 6% is the relevant rate for 10 years, and please note this is at the end of the period. Okay, so I think we had done. So I think we had done this earlier also. It should come to 7.46. Let's just quickly check it. 1 divided by 1.06. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If you do a grand total, you get 7.36008. We had considered 7.36. Okay. So, present value annuity factor is 7.36, same number what we had done earlier. Then you have lease payments. What are the lease payments? Lease payments are 1 lakh. So, present value of lease payments is at beginning of year 1 is how much? 1 lakh multiplied by 7.36, which is 7,36,000. This is the opening lease liability and a right of use asset, because there are no other costs involved. So, this will be your lease liability and your right of use asset, 7,36,000. Okay. Now, we have computed it at the commencement. Now, what we need to do? We need to arrive at the closing balances of lease liability and right of use asset at the end of year 5. Okay. That is the next thing that we need to do. And as I told you earlier, to calculate the closing balance of lease liability, you can simply take the present value of 1 lakh for the balance 5 years at 6%. That will also give you the lease liability closing balance, or you can prepare a schedule where you calculate the opening balance, interest, payments and the closing balance. That is also fine, right? So, to calculate balance of right of use asset and lease liability at the end of year 5, that is beginning of year 6. Okay. So, right of use asset at commencement is how much? Is 7,36,000. Okay. Depreciation for 5 years. How much will be the depreciation for 5 years? 7,36,000 divided by 10 multiplied by 5. You get 3,68,000. So, balance of ROU asset at end of year 5 or beginning of year 6 comes to 736 minus 368, which is 3,68,000. Okay. Now, coming to liability, opening balance is 7,36,000. Then you charge interest at 6%. This multiplied by 6%. Payment is 1 lakh. So, the closing balance is opening balance plus interest minus payment, you get 6,80,160. Okay. Then 680,160, interest at 6%, 40,809, payment 1 lakh, closing balance 620,969. Then opening balance, interest, payment, closing balance, keep on doing for 5 years. You get closing balance of lease liability as 4,21,224.73. Okay. So, this is one way to do. As I told you, the other way is calculate the present value annuity factor at 6% for balance 5 years. That is 1 divided by 1.06, 1, 2, 3, 4, 5. You get 4.21236 multiplied by 1 lakh. You get 4,21,236. We got 224. Institute would have got another number because of the rounding of differences. Okay, nothing other than that. No need to worry. Understand the concept that minor rounding of differences will not impact your examination marks. Okay. So, we have calculated the closing balance of right of use asset and we have calculated the closing balance of the lease liability. Now, we need to calculate the revised lease liability at the beginning of year 6. So, revised lease liability at beginning of year 6, considering what? Considering lease payments of 95,000 and lease term of 5 years and discounting factor will be 7%. Why? Because we have to use the revised discounting rate. So, again here you need to calculate present value annuity factor 7% for 5 years. Okay. How much will that be? Again you can use a calculator. 1 divided by 1.07, once, twice, thrice, 4 times, 5 times, and if you do a GT you get 4.100, and if you multiply that by 95,000 you get present value of lease liability. Now, if you multiply this 4.1 with 95,000 you get 3,89,500, which is present value of lease payments at beginning of year 6. Present value of lease payments at beginning of year 6 is 3,89,500. This is nothing but your revised lease liability. So, your lease liability has come down from 4,21,224 to 3,89,500. So, whatever is the difference will be adjusted against right of use asset. So, lease liability at end of year 5 is how much? Is computed as 421,224, and revised lease liability is 3,89,500. So, what has happened? It is a decrease, right? Decrease in lease liability. It is 421,224 minus 389,500. You get 31,724. Now, what will you do this? You will debit to lease liability and credit to ROU asset. Right? A simple accounting treatment, debit lease liability because you have to reduce the lease liability and credit the same amount to right of use asset, and the balance right of use asset will be depreciated over the period of balance 5 years.